Morning update on crypto, my dude. So, some interesting stuff is happening in the market today. The ADP jobs report is up, meaning more people got hired in private companies. At the same time, the reverse repo, RRP, is down, which basically means there's more money flowing in the system. Now, here's the weird part. Factory spending, PMI, is up, but factory orders are down. People are spending less on durable goods, big purchases like cars and appliances. Job openings are dropping, JOLTS, which usually signals a weaker job market. But somehow, private sector jobs, ADP, are increasing? How does that even make sense? It's like watching a magic trick. Things don't quite add up. But we can already predict that tonight's unemployment claims report will probably go up, and by Friday the total jobs report, FP, should follow that direction too. What this means for crypto. Big news events might make the market go up and down like crazy, pump and dump, but in the long run, fundamentals decide the real trend. I'm not selling and I'm staying in the market because crypto is here to stay. Wag me, we're all gonna make it. Trump's moves and what's next. Since Trump took office, unemployment claims have been rising, and they're not even adjusting the numbers anymore. Usually they tweak the data later, but now they're just letting it run up. So we might need to change our mindset. Good news, good for the market. Bad news, bad for the market. Simple as that. If unemployment claims keep rising, it's bad for the US dollar, but good for Bitcoin. But the real question is, where's Trump going to get money to fix unemployment? Answer: stimulus. More money printing means more inflation, which pushes gold and Bitcoin higher. And when Trump says gold going up means people have no money, just remember, rich people don't talk about money, they just hold assets quietly. And what about BlackRock? BlackRock, the biggest asset manager in the world, is launching a Bitcoin fund in Europe. If we were in a real bear market, why would they do that? Oh, and they just made the biggest Ethereum purchase in history. Come on, use common sense. These guys aren't playing games. If they're buying, it's because they see something coming. So yeah, let the weak hands leave the market. We'll just sit tight and get rich first. Crypto movement forecast. What to expect today. UTC +6, crypto doesn't just move randomly. There's a rhythm to it, based on liquidity and big market players making their moves. Here's the play-by-play of what's likely to happen today. 8 to 15 green, bounce back. After a big shakeout, there was a long squeeze earlier, meaning a bunch of leveraged traders got liquidated, pushing prices down. But now, the market is bouncing back because China's central bank, PBOC, is injecting liquidity. Importantly, they're not draining it, meaning they're actually adding money into the system instead of taking it out. So expect prices to recover and trend up. 16, red. Asian market closes, selling pressure hits. When Asia's market closes, some traders take profits, leading to a temporary dip. This happens often because big traders don't want to hold risky positions overnight. 1922 humidity. Green. Unemployment claims report comes out. The claim data, unemployment numbers, is expected to go up. Since bad news for the economy equals good news for Bitcoin, crypto should get a boost. Why? A weak job market increases the chances of government stimulus, which means more money printing, bullish for Bitcoin. 2223, red. Jane Street plays their games. Jane Street, one of the biggest market makers, tends to mess with the market during this time. Expect sudden price manipulations, fake pumps dumps, and general market confusion. If you're a trader, this is a time to be cautious. Don't fall for their tricks. 08 green, liquidity boost, no executive orders expected. RRP, reverse repo, is dropping, meaning more liquidity is coming into the market. This should keep crypto trending up overnight. No new executive orders expected from the US, so there's no sudden regulatory risk hitting the market. Why was the market red earlier today? The Federal Reserve announced that 22 banks will undergo stress tests. What's a stress test? It's when they check if banks can survive financial crises by temporarily draining their liquidity. Less liquidity means banks struggle, and markets react negatively. But here's the kicker. They're doing this to prepare for upcoming stimulus, which will bring back liquidity later. What this means: overall short-term dips are just setups for long-term gains. The Fed is testing the waters before injecting more money, which is bullish for assets like Bitcoin and gold. Don't get shaken out by short-term volatility. Big players are positioning themselves. If you're holding, just chill. The game is rigged in favor of those who stay patient.